I feel like Britney Spears. Hit me, baby, one more time as buyers and sellers deal with crazy sticker shock. Well, I haven't seen rates like this since 2006, 2007 timeframe. So let's jump right in and look at what's going on with the sticker shock as we see crazy high interest rates. With the mortgage rates soaring, the housing market takes another hit. As the average 30-year fixed rate mortgage eclipses 7%, home buyers and sellers are confronting sticker shock. The interest rate for most common home loans in the United States surpassed 7% this week by one measure. The latest signal that the high-flying housing market has definitely fallen back to earth. Now, when the year started, I expected interest rates to increase. No one expected interest rates to get to 7% as we sit in September. So the sticker shock for a lot of people dealing with the higher prices that we had at the earlier part of the year, we then start to see prices level off. We then start to see prices decrease. And now we see these interest rates going through the roof. So the sticker shock is real. People don't know what to do. This has been a roller coaster of a year. And as long as I've been in this business, which is pushing 20 years at this point, I started when I was 3. Anyway, at this point of the year, there is no one that could expect interest rates to be at 7%. So buyers and sellers are having to navigate this. Sellers are being way more flexible. Sellers are now offering all kinds of assistance for buyers to be able to help them buy down their interest rate in a lot of cases. There's going to be a lot more people that are looking into adjustable rate mortgages as well. And whether that's a viable option for you or not, talk with a professional. ARMs are not bad products if you know how to use them. All right. I know people demonize an ARM, an adjustable rate mortgage, but I'm just here to say if you use it right, it's a tool. It's a tool to use. But the reality is even adjustable rate mortgages right now are relatively high if you want to compare it to just a few months ago. We definitely don't even want to go back to 2021 because we know where rates were back then. That ship has come and gone. According to Mortgage News Daily, the average 30-year fixed rate mortgage reached 7.08% just this week. Another survey by the Mortgage Bankers Association showed the rate averaging about 6.52%. Again, the highest reading since mid-2008. Freddie Mac placed it at 6.7%, which is up from 3.01% during the same week last year. So the sticker shock is real. And I'm going to show you an example of how the sticker shock is affecting people, how it is causing some people to just not be able to buy at all, and they're forced to rent, especially the first-time home buyer. Those are the people that are getting affected most by this. Because if you are a first-time home buyer, not in every case, but in a lot of cases, you don't have a whole lot of extra resources. And now you are now being hit with a higher interest rate. You may have to pay points, meaning a percentage, just to be able to get an interest rate. Right now, the mortgage market is a little uneasy. And so you may not have an opportunity to get what we would call a par rate, which is free. You may not be able to get that right now just because of the chaos going on in the market. So a lot of the resources that you may have reserved for down payment, closing costs, well, now with these rates getting a little bit more higher, those resources or reserves that you had set aside, they're not going as far as they did 3-4 months ago. Because now you have to factor in, okay, do I have to do a buy down just to be able to get my rate a little bit lower the first few years to make it a little bit more affordable for me that first couple years? Do I have to pay points in order to get an interest rate, right? In a lot of situations, you're having to do that. A lender could help you. A seller can help you as it relates to maybe like doing a 2-1 buy down. I won't go into that in this video, but there's a lot going on. But the bottom line is first-time home buyers are the ones being most affected by this. But the reality is everybody is being affected. Buyer, seller, everybody's being affected as these rates go up. So let's take a look at this example here. So assuming a 10% down payment, a home listed at the national median asking price of $435,050 in August of 2022 costs nearly $1,000 more each month than it did in August of 2021, when the average mortgage rate was 2.88% and the median home price was about 14% lower. Are you kidding me? $1,000 more as of August than it was a year ago. That is a game changer. It is also a deal breaker for a lot of people, understandably so. We are in a lot of ways being forced into becoming a renter nation, which I hate, because again, for most people, owning a home is the best way for most people to generate any type of wealth, right? So you buy a home today, you hold on to it for several years down the road, you sell it, you build equity, you build equity, you build equity, you sell it, maybe you make a profit, okay? Not a guarantee whatsoever, but typically that's what happens if you hold it long enough. Now, if you're looking to get into a home in 2022 and you want to flip it and make a great deal in a year or two, this is not the time to buy. No, not the time to buy for you. Although there are deals, there are people that are still struggling. Although in a lot of cases, if you have a home and you are struggling for whatever the reason is, a lot of people could just sell that home. But as the market slows down, which it is, those people that are in dire situations or in situations where they're struggling, that opportunity just to turn around and sell that home, like they may have been able to do the early part of 2022, that opportunity is not the same right now, right? You might be in a situation where you have to sell, and it's not a guarantee that you're going to be able to get a profit from the sale of your home. So it really obviously depends on when you bought your home. But my point is, if you're looking to buy a home and flip it in the next year or two, probably not the time to purchase a home. It's probably not going to be the best idea for you to be able to get a home, especially if you're paying market value. Now, again, if you can find a home for pennies on the dollar, go for it. There's still opportunity out there. So in all this chaos, there's always opportunity. Keep that in mind. According to this article, higher borrowing costs have already begun to cut into sales. Existing home sales in August were down nearly 20% from August 2021. That's according to the National Association of Realtors. But keep in mind, while prices, although moderating, in many markets across the country, they're still high because the inventory is still far below pre-pandemic levels. So yes, we're seeing a lot of price moderations, but in several markets across the country, we're not seeing the same level of price decreases that we're seeing in other markets. Now, with all this news, I always like to keep things in perspective. So let's take a look at this. Although the sudden surge in borrowing costs has been jarring for buyers, 7% mortgage rates are far from an industry record. The rate peaked at over 18% in 1981, according to Freddie Mac, though home prices were much lower relative to median income at the time. So can you imagine 18%? Well, if you bought a house back in the 80s, you can relate to this. Now, I don't know what that feels like, and I don't want to know what an 18% interest rate feels like on a home, but just to keep things in perspective, okay? We are nowhere near that, although we are at historic highs right now, at least as it relates to the last 15, 20 years, right? So listen, things will get better. At some point, we'll get to the other side of this. Unfortunately, this inflation that we're dealing with right now, the job situation, there's a lot of shortages in certain industries as far as employment goes. In some industries, there's not. So we have a lot going on right now, which is really adding to the sticker shock, so to speak. So we've got sticker shock with prices, we've got sticker shock with interest rates. We also have some sticker shock as it relates to inflation. And so we're going to get through this. Hang in there. If you have questions, comments, comment below. Let me know what I can help you with. I am here to serve. I want to help you any way I can. Remember, just get yourself financially fit. I'm going to continue to talk about this because this is important, whether you're buying a home or you're looking to lease or rent. Get your money in order, get your finances straight. Keep your credit card balances low, right? Utilize them as little as you possibly can if you're preparing to get into home ownership. This is the key. You want to make sure your credit is in good shape when you pull the trigger on that home. So keep that in mind. Hang in there. I want to hear from you. And remember, don't just make a move, make a power move. I want to see you on the next video right over there. Go check it out. I'll see you there.